Hey everybody, we are about to get started. Let's have a quick sound check. I'm starting the countdown a little later than normal today, so a quick message on the chat box would be appreciated to confirm that you hear me well. Thank you so much, guys, for confirming this. I will just wait a few extra seconds just because I started the countdown a bit later today. Also, talking about later today, we had the daylight savings times change, and therefore I would expect that maybe someone got distracted and you may or may not be in the session. You may end up watching this recorded, or you may be totally in tune with the changes of time, and you may be in the session with me today as well. So very good. Yes, so it looks like we are good. How are you, Mark? It's good to see you. Very good, everybody. Perfect. Okay, so let's get started. Welcome to the session, everybody. Today it's March 13, 2022. My name is Jose Blasco. This is a top session. So in the top session, we talk about the top platform and top trading. But before we get started, I have a disclaimer, as always, for you to read carefully. It's in the upper left side of the screen. It's being highlighted. It's fairly short. Therefore, I am counting on you to read it completely because it is important information. Thank you very much. So the top session, as I was saying, is a session where we talk about the platform top. Whoop, I just clicked in the wrong place. Here we go. We talked about the top platform, and many times when we talk about the platform itself, it's difficult to talk about trading software and trading technology without maybe getting into trading lecture time. And sometimes we have a little bit of a mix, okay? More often than not, actually. So feel free to ask questions as well during the session, apart from the topic I have in mind for today, which is the continuation of our prior session with the matrix. Certainly, I'm happy to listen to you when it comes to any questions, needs, support that you have or you need when it comes to the platform and trading. Okay. Very good. Wonderful. Okay, so let's begin. I'm just going to close our introduction slide. Also point at our question page, which is where you come to find the questions, right? So this is where you come to find, I should say, find answers more than find questions. Actually, it's both. You find the questions that other posted so you can find the answers. Or if you don't find your answers, you can click on the green button and pause your question. I always encourage you and recommend you to be very, very visual when you upload your questions, not only text. If you could add screenshots of your screen, anything, maybe charts, so that way we can understand the question to a deeper level, and that way help you as much as we can. Okay, so keep that in mind, and this is the page that you want to use. And with all of this said, we are now looking at top and ready to begin our session. When it comes to learning more about the matrix, which is the tool that we started discovering to a deeper level in the prior session. Okay, so we're going to continue here. We will need to run multiple sessions of the matrix, more than the prior session, and today we're going to go beyond that because there are many things to be discussed. But today, hopefully, if we add prior session plus today, probably the use of the matrix on your end is going to start to be quite interesting and complete. Okay, so let's go for it. So I just floated the matrix so I can just make it a little larger on the screen and focus on the matrix. Since this is the tool that we are discovering today. Okay, everybody all okay, all good? Yeah, it seems that nothing new on the chat box. Okay, very good. So let's begin. Okay, let's begin. Well, the last week we started looking at the matrix, and really we started focusing on the additional filters. Okay, this is what we started doing. We were not able to complete our session. Or let me rephrase that. What I meant to say is that we were not able to complete going through all those different tabs in the prior session. That's what I meant to say. So we're going to continue today from this bottom part of the screen with those additional filter tabs and complete that before we move into other portions of what we have on the screen. Okay. So last time we talked about the stock filter, the options filters, and also the scan list. And that's basically where we stopped. And today I'm going to continue talking about the next tab, which is the DT, Elliott wave, okay, as well as the Elliott wave turning point, CWTP, which come hand in hand with the strength levels, okay, which are two concepts which are obviously very much related, because you may have an Elliott wave, but if there is no strength, it may not propagate, and vice versa. Or if the strength is too much, it may not be sustainable. So again, those concepts come hand in hand, and the reality is that you could use them in many different type of levels and conditions, okay, or trading plans, okay. So we're going to start looking at Elliott wave turning points. If you are familiar with the Elliott wave turning point analysis technique that we have in top, which I'm just going to maximize the chart here, remove all studies and add Elliott wave. So when we add Elliott wave, notice how you could select short-term, medium-term, dynamic, long-term, ultra-short. So if I was to accept everything, so you have a collection of indications that will tell you when to be a buyer and when to be a seller, expecting a wave to propagate after the wave is supposed to have started. This is the meaning of all these visual graphical informations. So in the matrix, we can scan for that. The first thing that you can change is the interval, which could be set as daily, 2-day, 3-day, or weekly. So we can look for Elliott wave turning points that are happening in those various timeframes. For demonstration purposes, I'm going to be using daily. And there you may want to select up or down, depending on what you're looking for. Maybe you're running a portfolio. You have multiple stocks where you are long already, and you are trying to find a good candidate to short in case the market was to fall, at least to have something in your portfolio that makes some money on the way down. So maybe you would select down, and this would look at, Elliott wave turning points pointing down. If you're looking for Elliott wave turning point pointing up, you would select up. Also, the signal can be generated on the current bar or prior bars. Could be the prior bar, or within the last 3 bars, or within the last 5 bars. Of course, if you choose within the last 5 bar, you're going to get more results. If you use current bar, you're going to get less results. So if I scan for current bar, so you still have a bunch, because there are many stocks in the US market. If I was to add other filtering conditions, such as the stocks belong to a strong group, for example, and I was to scan, so I would expect now the list to be much shorter. And if I also select the midterm to also be strong, now even less. And if I select the stock to also be strong midterm and long term, so now the list becomes shorter and shorter. Basically now it's like a 2-page long list. So you got much less symbols, okay, if you use the current bar. Now, and I'm not saying it's few, but it's less compared to if I was to use within the last 5 bars, where now the list becomes much longer, because any indication that have taken place, not only in the current bar, but in any of the bars, 5 to the left, so that would return, a result that then you can go ahead and check on the charts. Okay, so again, the downside of using signals that they generated too many bars ago is that you may be late to the party. The market may have moved too much already. You may be actually in the middle of the wave already, so reaching maybe the end of the wave, and therefore the reward to risk ratio may be very poor. But you have more opportunities where, if you were to select the current bar or the prior bar, you may still be at the beginning of a potential wave, but the quantity of trades available will be less, and therefore there may be times where you actually got no results at all, especially when you start adding other conditions, like, for example, you want the options to be low price or things of that sort. So now, next thing you know, the list now it's 1 page, right? It's only 1 page, and you may end up in certain cases with no opportunities at all. So this is something for you to keep in mind, which obviously I would say current bar or prior bar is probably the most useful of all from a reliability point of view. But again, you may have too little amount of opportunities, and therefore it may not work for you depending on your trading plan. Okay. And finally, apart from selecting the interval, okay, for each interval, daily, 2-day, 3-day, and weekly, you can apply a Elliott wave in a way where you're looking for different types of waves. Are you looking for a long-term wave? Are you looking for a short-term wave? Are you looking for a dynamic wave? So again, just like when we inserted the indicator on the screen, we had 5 possibilities. Okay, the orange indication, the blue indication, all of those represent orange is long term, blue is midterm. So, as all of this is identified on the chart, you can actually scan for it exactly the same way. You have 1, 2, 3, 4, 5 options here on the drop down menu. And therefore, let's say you're looking for long term on the daily. So that would be, how you would set up your filtering conditions to get this trade. And by the way, I'm just noticing, silly me, I never check mark DT Elliott wave turning points. As I was focusing on the drop down menus, I was actually not looking that I have not checked mark DT Elliott wave turning point. So let me go ahead and reset this, and let's go back here to now searching for Elliott wave turning points to the upside on the long term. And now we have none with the current bar. If we look at the previous bar, none. If we look at up to 5 bars, now we have a few. Okay, so now I guess that visually speaking, the point I made earlier is clear now. I was kind of surprised. I'm like, how come so many symbols? Normally, I actually use a scan list, which I did mention that the other day, I believe, where I use the penny increment options. And therefore, by filtering with the penny increment options, whatever you filter becomes such a shorter list. Notice now it's only one. Okay, so I kind of am used to have the short list, and I was quite surprised the list was so long. But anyway, so this is basically what you get with Elliott wave. And as I kind of suggested already, you can actually combine it with filtering based on other conditions, such as the stock filter, such as implied volatility for the options, and many more, which we will talk about one step at a time. Okay, so please go ahead and confirm on the chat box, if that's okay, that you are with me on the use of the Elliott wave turning point filtering conditions within the matrix, and that all is good, all is understood. Just to demonstrate, I'm just gonna go ahead and grab that chart and make that chart to be all groups. Therefore, when I click on the matrix on any of the symbols, so actually it's not gonna work because the matrix is floated. So let me pick the same color. Here we go. So if I click on any of those symbols, for example, FOE, and I go back to my chart. So this is FOE, and you can see that just a few bars ago we got the Elliott wave turning point there that was identified. Okay, if you were to, instead of up, look for down, and instead of long term, just to create a little bit of diversity, I was to look for medium term, and you click scan. So now we have 3 symbols. So if I look at WAT, for example, and again I was to look at the daily time from WAT, notice how just a few bars ago we got the Elliott wave, in this case blue color because it's the medium term wave. Okay, so all of this is part of the scanning tools. Of course, if you were to select, let's say, weekly or 3-day time frame, for example, and you do the same analysis, okay, now you have jobs, for example. When you go to the jobs chart, okay, careful here, you may or may not have the Elliott wave turning point on the last 5 bars, which in this case is orange. Okay, we are looking for a blue one, and the reason is because my time from here is daily. I need to make sure I change that to 3-day, and now here we go. Here is my blue arrow pointing at the Elliott wave turning point in this particular time frame. Okay. Cool. So I guess I made my point here when it comes to the Elliott wave turning points, and all is clear and understood. So the next one to discuss is the thumb strength levels, which the thumb strength levels, we talked about it in prior sessions. It's also a tool that could be added to the charts as a study. So if you add it, it's going to give you this type of indication in the bottom part of the screen. And remember, this was a normalized strength analysis tool that basically gives you 4 colors above and 4 colors below, going from blue to purple to orange to yellow. Same thing on the bottom part. You have the blue, you have the purple, you have the orange, and you have the yellow. So those are 4 levels of strength. And then you have a zone in between where, as long as you got these horizontal rectangles, if they are in the upper part, it means that you are in a neutral stage of strength, and from there you may have the market to move in the upper direction because it's a rectangle on the upper part. If the rectangle is in the bottom part, so that means that during this time you are in a neutral zone of strength, and from there the market is supposed to push again on the opposite direction. Okay, so again, you could see how you have a impulse, right? Then you have a correcting move. As the move is correcting, you get this rectangle. So entering somewhere here, if you had an Elliott wave indication, could be smart, expecting the wave to continue, which in this case, to be honest, it didn't continue. It didn't continue. We did not have a continuation to the downside. Okay, we're talking about stocks, and I'm looking at dates in 2018, which those were pretty bullish markets. So obviously, market would probably not tend to continue going up all the time. But there are times where you will have, a moment of strength in the market, or you have all this impulse. You come to this equilibrium area, if you wish, and here, if you had some sort of an Elliott wave turning point, then you would expect a continuation, and therefore getting back into strength again. And again, you could basically combine Elliott wave with the strength indication to know a bit better when to accept or when to reject an Elliott wave indication, because the Elliott waves indications are potential Elliott waves going to begin, but it's not a confirmation. Actually, when and we talked about this before, but when the market is open and the candle is basically price movement is going up and down within the candle, so that Elliott wave indication may turn itself on and turn itself off during the day. Only when the candle closes is when now you have a stable condition of Elliott wave that is now, to be considered depending on your trading plan. But during the day, the readings that you may get are going to be less stable compared to when that candle has closed. In this case, every 3 days, because it's a 3-day time frame, or if it's a daily time frame, then every day, right? So in other words, you could be looking at trying to maximize the probability of those Elliott waves to work well by also combining the strength together with the Elliott waves, and it will look something like that. So, for example, let's say in daily time frame, I'm looking for Elliott waves to the upside that were reported, anywhere in the last 3 bars, for example, for medium term. And at the same time, I'm also looking for a strength level in the daily time frame, and I want it to be in the neutral zone, which is what I just mentioned. Okay, notice how you got 4 levels above positive, 4 levels below negative, and then you have the neutral zone, which is what I just explained. So if you were to scan based on that, okay, so now you are given a collection of symbols, for example, Citrix systems. So if I load Citrix systems, so notice how we have the Elliott wave indication while we are in this rectangle area, which represents a level of strength being neutral, which could be the recipe of a correction after an impulse that would be followed by an impulse, which would be the wave propagating, which is supposed to propagate given the indication that we have. So, and in this case, to be honest, that stock, it's kind of dead there. So that indication maybe would be much less relevant compared to other stocks. Just for fun, I'll click on another one to see, for example, PBR, where here we can see there was an Elliott wave indication, okay, inside of the neutral zone. And from there, now the wave started propagating, where the final target is a bit higher up here. So this is the kind of setup that could be useful. There was another setup very similar here, okay, where there was a neutral zone here, a few days after the Elliott wave indication. So you could have relied on that to try to catch a move, depending on your style, on how you use the entries and the exits. My favorite approach for entries and exits is the UFOs. But again, you could certainly add the UFOs on top of what we're discussing now, and most importantly, with the matrix, scan it. Okay, scan it. So again, of course, you can make this more complex. You can be like, okay, so I want it to be on the, I want to have a little bit of evidence. So maybe on the weekly time frame, I want it to be strength 1. So the move already kind of started, right? But on the daily time frame, I want it to be neutral. And then I want the indication, and because I'm relying on the weekly time frame, I want it to be a long term. Okay, so again, all of this has to do with the trading plan. In this case, we got no results. That's quite demanding, to be honest, to scan like that. I would expect, especially if I'm scanning for low implied volatility on top of that. But in any case, no matter what I'm going to select now, I would not expect that many results with that type of scanning. Here we go. And those, potentially, technically speaking, could be, pretty decent opportunities. Where on the weekly time frame, we are on strength one. So this market is not totally exhausted at all. On the daily time frame, we are now entering the neutral zone right there. Okay, and we have an Elliott wave indication that just started. The target is further above. So here we go. Now you may want to plan a trade with options. Right click, send it to the strategy builder, and again, you are combining now the matrix to find the opportunities very quickly, together with the strategy builder to create and build the trade combinations also very quickly for you. Okay, cool. Okay, so now the strength indicator, which has the word strength in it, could also be used for things others than strength. In this case, the opposite, neutrality. So instead of trying to catch a move with Elliott wave, if you are looking to doing the opposite, which is to do non-directional trading, something that you could do is to actually filter for neutral conditions on a larger time frame, such as weekly, as well as neutral conditions on a daily time frame as well. And when you do that, I mean, of course, now I disabled Elliott wave, so now I would expect a way longer list. But now you got many stocks that when it comes to price behavior, so if I pick any of them, so you would see how the price behavior of that particular stock, it's kind of like trading sideways. Okay, this is on the daily time frame. If you look at the weekly time frame, so it's loading, so you can see as well how in the weekly time frame there is a little bit of a downtrend, but it's nothing that major. Okay, it's not doing that much. So again, for you guys out there, non-directional traders trying to define trading ranges in the market and do iron condors or horizontal spreads or trades of that nature. So this particular approach could be useful, okay, to find those trading ranges, okay, those markets that are trading a range. As you are combining two time frames together, it's a great thing because maybe you pick up some strength on the daily time frame, but because the weekly is neutral, it's going to take a while for the neutral to really define itself as gaining strength. And therefore, again, you are likely going to experience trading ranges which don't become that wide, okay, unless something relevant happened to the stock or the market, and then that day you are wrong on your trade. But from a research point of view, this is going to save you a lot of time, and you are doing a multiple time frame kind of like analysis in order to detect those particular stocks that may be good candidates for non-directional trading. Of course, let's say you want to do iron condors. We'll talk about this later, probably in a different session, but you could certainly now add scans for volatility to be high, so options are expensive. This is going to make the list to be shorter. Okay, of course, you can also end up, loading your specific list of stocks if you have any list of stocks of, in my case, I use the penny increment options. So you could do things like that, and now you ended up with one symbol only, which potentially could be a very good opportunity of a stock which is fairly liquid with a market condition which, as you can see on the weekly time frame, is sideways. Okay, and when you change to the daily time frame, it's also sideways. Okay, and now you can position yourself there with a nice iron condor, ideally, assuming earning dates and everything else is in your favor, and depending on the rules of your trading plan, you can then position yourself in a proper trade with odds in your favor, where you also saved a lot of time to be able to find such trade, thanks to the matrix, which is the reason for this tool. So again, this would take care of our tab DTEWTP, where we talked about Elliott wave as well as strength, defining strength of something strong or the complete opposite, which is something neutral. There is one last thing that I'm going to point at, even though in a moment we'll talk about AutoClimate, and you will see me talk about this again. But The other thing about strength is that when the strength is too much, either 4 positive or -4 negative, okay? So basically, you are dealing with stocks which are behaving in ways that are too exaggerated. And while this does not guarantee at all that they're going to stop and they may continue behaving in such an exaggerated manner, the reality is that um, that may not be sustainable. So for you guys out there looking to do counter trend trading, for example, so I'm just loading one of the stocks that was reported, ACHH. So notice how we have such a massive move. We got to the yellow. This is strength number 4. So from there, you would be expecting this market to turn around. Okay, you can see here as well, same story when that market was falling, and came to the yellow right there. So, you could have sold bull put spreads, things like that, and expect it to turn in the opposite direction. Here in this case, maybe time to start thinking of setting up bear call spreads. Of course, you will need UFOs for that. Let's see if we have UFOs. Here we go. You have a UFO up here. So assuming our premium enough, you can do a bear call spread up here. And you would expect that that market will do some sort of a correction. I'm not saying it will never resume and keep going, because remember, after you have a movement of strength, you are likely going to have some sort of a pause and then some sort of a continuation. If the market is going to be trending, that would be the case. But also often, when you get to levels of strength that are very exaggerated, you end up with a complete reversal, strength in the opposite direction. Okay, so in this case, it went to orange and then it went strength in the opposite direction. So in this case, it went all the way to yellow. So even more now, you would expect it to reverse. Okay, so again, the timing is key, and that's why I just added the UFOs on the screen, because if you were to do, let's say, a bear call spread and you sell the options in the wrong place because you were not aware of the key turning points in the market based on field orders. So yeah, probably your bear call spread would be in the wrong place, and then you lose money, even though then after you lose money, the market does exactly what you thought it was going to do. That could certainly happen. So take this with caution, this kind of filtering, because now you are dealing with a situation where you are fighting an impulse, you're fighting a trend, which in one hand is not sustainable when it gets to yellow, or should not be that sustainable when it gets to yellow. But at the same time, the fact that it got to yellow means that there is plenty of strength in that direction. So you gotta respect it. Okay, you cannot be that aggressive by selling options too close to price. You need to give yourself a little bit of a cushion of room, including the use of UFOs to be a bit safer. But let's say, for example, that out there you are a trader who likes to do bull put spreads, and the only thing you like to do is bull put spreads. So maybe what you could do is you could look for very weak stocks that went to a place of weakness which is non-sustainable, and then you can look at those stocks to belong to sectors which are strong, right? And when you do something like that and you scan, let's see how many we're going to get. Not too many, because if the sector is strong, the stock should be okay. But notice how we got a few. For example, Boeing Corporation, Boeing the company, I should say. So it's been dropping very aggressively. You got like 3 UFOs below price. So maybe selling premium around those UFOs could be a smart thing to do. And again, you will need to check earnings and many other things as well. Make sure that you do this properly, okay? But basically, we are now dealing with a level of strength which is extremely weak, and therefore typically not non-sustainable. Notice what happened the last time it happened. The moment it went to yellow, it turned in a pretty major way in the opposite direction. In this case, you can see how the yellow already started bending. So again, not a guarantee, but this may indicate it's going to come back higher. Okay, and in this sense, if you were to find UFOs below price, as we said we have, so you can be selling premium, and notice how quick you found those opportunities. Okay, very good. So again, the fact that we have the word strength doesn't mean that this is to be used for strong instruments. You could actually use it for neutral, non-directional trading. You can also use it for weak, which is, weak is actually strong to the downside. Okay, so weak and strong is kind of the same, just the opposite direction. Okay, cool. Okay, so I'll take a sip of water and I'll continue. How is it going out there with this particular tab? Please let me know, confirm that all is good. I would appreciate that very much. Thank you, my friends. So next up is earnings. Okay, and well, I just mentioned earnings a moment ago because again, it's something very relevant in the marketplace that maybe the source of opportunities, but also the source of major uncontrollable risk, especially because most of the stocks report earnings when the markets are closed. And either pre-market or post-market is the normal thing. Also, earnings have other impacts, especially in the prices of options, where as earnings are approaching, typically the prices of options go up, and you may find yourself buying options which are too expensive, and on top of that, now the earning result is bad and the stock goes against you. So you get hurt double because you purchased options that were too pricey and you didn't know earnings were going to happen. So in other words, you should always be aware when trading stocks on when earnings are going to happen. For that, we have just a quick reminder here. We have an earning type of study. I'm just highlighting the vertical line that shows us when the earnings are taking place. So you can see every 3 months we have an earning report on those particular dates. So if you turn on a tool of this sort, and you know, let's say you are ready to trade a Boeing, well, you will know that 427, it's probably a very good day to keep in mind because that's when the next earnings for Boeing are going to be reported, and that may or may not give you time enough to get to your target. Again, depending on the trading plan, you may approve or reject a trade, but definitely you should be aware of that date. Okay. Now, being aware of the date is certainly something that we should do, but one very good practice that even if you were to kind of get distracted and forgot to check on the date, would help you to at least not to get in trouble, at least for a while, hopefully before you realize it, would be to use the matrix with some filtering condition related to earnings. For example, here you could say, hey, I want to trade stocks with whatever other conditions I set on all the other tabs, drop down menus and so on, but I want to exclude stocks that are reporting earnings in the next 30 days. So maybe you want to ignore any market opportunity. If the stock is going to report earnings in less than 30 days, you want to ignore it. Why? Because maybe that, depending on your trading style, the time frames that you use and so on, maybe that does not give you time enough for such stocks to basically get to your targets, and then you will be forced to exit the trade in the middle of the trade and things like that. And maybe you just want to ignore those stocks that are reporting earnings in less than 30 days from now. So that's how you would scan. You would select exclude anything that reports earnings in the next 30 days. And when you scan, so now you're going to get a list of stocks, which of course is going to be long because I didn't set any filtering condition. Let's add something here. For example, Elliott wave, in the last, in the current bar. Okay. So that's good enough. So if I click scan, I get Coca-Cola, which is one. If I was to uncheck earnings, not sure how many more I will get, but probably more. Well, no, in this case, I guess my condition was a bit strict. Okay, let's be a bit more flexible. I'm gonna go for 5 bar just so my list is longer for demonstration purposes here. So now I have a longer list. Okay, now if I re-enable, okay, earnings to be less than 30 days, to be excluded. So now I have a list which is a bit shorter. Okay, and it's difficult to perceive here because again the list goes beyond one page, so it's difficult to perceive. But if you noticed, the size of my scrolling bar here on the right went a bit smaller. So you can exclude, or maybe you can include as well, depending on your trading methodologies. Maybe you are doing earnings plays and you want to know which are the stocks that report earnings in the next 5 days. Because maybe the way you do earnings, the way you trade earnings is by maybe you do some sort of a strangle or a strangle with a tweak type of strategy, or you name it, and you want to do that a few days before earnings take place. So maybe you're looking for that optimal point and you want to scan for those stocks with that filtering condition in place. Let me remove the Elliott wave turning point in this case. We don't need that. Okay, so notice how now you have this particular list, and again, if I was to choose stocks that report earnings in the next 3 days, so now my list is supposed to be shorter. as it is, again, we don't notice it very well because it goes beyond one screen. But if you looked again at the scrolling bar, you would see now the scrolling bar represents a shorter list. Okay. So very important to keep this earnings filter in mind. In my case, every single time I scan for something that is tradable, I always have some earnings rules that I scan for. So that way, if I was to get distracted and then for whatever reason I forgot to check earnings on the chart, which I normally don't forget, but I'm human, so at least my initial filtering condition saved me some trouble if I was to be distracted. Okay. Then apart from choosing include or exclude, and you have, I guess it's self-explanatory, multiple choices here, you can also specify specific dates. Maybe you have a very specific type of option strategy that you use where you need, for example, you're looking for the expiration date on the 18th, and maybe you need to do a trade exactly, on either the 16th or between 16 or 18. Okay, so you select 16 to 18, and now when you scan, the results you're going to get are related to those particular dates only. Okay, which in this case is 3 days, starting from the 16 plus the 17 plus the 18. Okay, it's 3 days in this case. Yeah, so that's how you deal with earnings. Putting on the side the rules of your methodologies, and some of you are trying to move away from earnings. Some of you are trying to find the earnings. Again, setting your rules here is critical, really, to either find those opportunities, but most importantly, to also avoid trouble in case you got distracted. Okay. And by the way, I'll make one extra comment about earnings, which is the fact that earnings are set to be on a specific date. For example, here with Boeing, it's April 27th, as you can see on the screen. It doesn't mean it's going to stay like that forever. And it happens that from time to time, companies will change their earning dates, and push it forward by 1 week or 10 days. That could happen, and it does happen. Okay, so earnings is something that you should watch not only as you plan the trade, but also as you are trading that particular opportunity, and time is passing. Well, you should review that the earning date stayed the same or that the earning date changed. Very good. So I did uncheck earnings. Everything is unchecked so far. Yes, correct. Okay, so the next one in line is the stock price range, but also just like before, I'd like to get confirmation from you guys on the chat box when it comes to the earnings tab. Is everything okay with the earnings tab? Is everything understood when it comes to the earnings tab? Please let me know on the chat box. Take a sip of water and I'll see your responses in a moment. Very good. Perfect. Okay, so let's continue. Thanks for that. So stock price range, okay, with the stock price range, basically you have an option here where you can check market and define a specific amount of time, which goes from 30 days to all the way to 250 days. You may want to think about, 1 month to 1 year, something like that. And in that particular amount of days, you could set a minimum to a maximum price range on what that stock is capable of doing. So, for example, let's say, as we were doing before, we are looking for stocks that are crashing very badly with a strength of -4. Okay, let me uncheck price range. Okay. So we have that stock, which all those stocks that are crashing aggressively with a strength of -4. And we also said that we wanted them to crash very badly, but they belong to strong groups. And then we had a shorter list. Okay. Well, now you can come in here and see and be like, okay, well, I want this, but also while the stock is crashing very hard at this moment in time, I want to know I'm dealing with a stock that in a normal case, it's not that crazy. So if you look at the S&P at this moment in time, or more specifically, if I was to look at the VIX, here. So if I were to look at the VIX is currently trading at 30.75, which means that the majority of stocks in the US, based on the implied volatility of the options, they are supposed to move at the time of this recording. They're supposed to move at a rate of 30+% per year. So maybe you want to use stocks which, as a maximum, they're gonna move that amount, okay, and as a minimum, to make sure that this huge drop, it's powerful. Maybe you want the stock to have been dropping already at least by at least 30%. Sorry, 10%, or maybe half of that, 15%. Again, you need to adjust these things depending on your trading plan and rules. And of course, there will be times where the size of the list is going to be very short, and times where the size of the list is going to be much longer. Like, for example, when the markets are falling hard, you're going to get many results. When the markets are rallying, in a very healthy mode, you're going to get very short lists. So the numbers that you put in here are going to be very helpful or very limitative, too limitative. But again, so that all depends on your trading plan, but just giving you an idea here. So if I was to scan by that, so now you are left with these two guys where not only FLO and RNR, they are falling, and they are falling hard, okay? In the last year, they fell at least by 15%, which is a lot. But at the same time, in a whole year of price movement, that stock doesn't surpass 30%. In other words, those stocks are quite quiet. Okay, it's a stock that is basically matching what the S&P is supposed to do. The S&P is made of the 500 greatest stocks in the U.S., greatest companies, I should say, of the US, and therefore it's supposed to be an instrument that doesn't move the fastest. If you look at the speed of movement of, stocks like Tesla, Apple, Amazon, those stocks normally move way faster than the S&P. And in this case, we are having a stock which is really crashing hard. The strength is -4, but at the same time, technically speaking, it doesn't move that much. It's normally moving like the S&P would, or less. So in other words, maybe you want to, do some bull put spreads here or something like that, knowing that we are, again, coming back to what I said before, we are in the yellow, so this is supposed to not to be sustainable. It may at some point turn. Of course, that UFO is probably the reason why it will turn. But also it's going to be a good thing to know that, if this is the high, and normally in a year it's moving less than 30%, because that was our condition when we filtered out, isn't it? So 29.5 times 0.7, that means that stock will drop to maximum 2065. So 2065, it's somewhere here. So maybe you consider, selling options down here, which is kind of like from top to bottom. It's almost like a 1-year move, but 1-year move, which would have started in January, should happen in January next year. And if you are selling options there that expire, let's say, next month, so the probability, at least based on the rationale of what I'm explaining, the probability of the stock to get below those UFOs before January next year is fairly low. And the fact that it's dropping like the world is ending is probably giving you levels of premium that could be very interesting in a market condition that is supposed to not to be sustainable, with the UFOs ready to turn the market around to the upside. So these type of filtering conditions, where I am combining the results from one tab to another tab, could be very useful to help you define the rules of your trading plans, but also to save a lot of time when you are looking for opportunities. Okay, when you look for craziness, right? Because craziness equals opportunity, but then you limit what craziness is using this stock price range filtering condition, which again has its pros and its cons, but in a context like what I have defined, hopefully you see my point and you understand the advantage of what I'm looking to do here. Okay, of course you can use this for many other type of scenarios, and certainly it's indeed valid. Okay, again, it's all, in the end, it all depends on your trading plan, and you can just input your parameters in the matrix and search for the opportunities the way you would like them to be. Cool. So going to get into AutoClimate. Let me know how is it going with the stock price range. Quick message on the chat box, as always. That is greatly appreciated. I'll take another sip of water. Thank you very much. And we're going to continue now with the AutoClimate, which is quite self-explanatory, to be honest. Let me uncheck everything. So uncheck, uncheck. Here we go. So AutoClimate. Okay. So if I don't filter for anything, we're just gonna get a very long list. Okay, the whole list of all the stocks in the U.S. market. So that's a long list because I'm looking for all stock symbols. But now, if we turn on AutoClimate, okay, now we're gonna be able to start filtering out for climate conditions in the market. Okay, and the climate conditions, of course, I'm guessing that everybody's with me when I say AutoClimate, but just in case. So the climate conditions are here. And beyond the strength levels, which you could certainly combine the climate and the strength, beyond the strength levels, what the climate condition is telling you, it's telling you more about the statistical phase in which that market is. Just like seasons that work in cycles, climates in the market also tend to work in cycles. So here is AutoClimate trying to define what an up cycle is, what a down cycle is, using two different values, which is what we call the max distance as well as the count, being the count probably the most relevant of the two. And that's the one you have in the matrix that you can use to filter. So in this case, for example, we have a case of a climate which is down. Okay, red means down climate, so it's down. It's been down for 11 candles. Statistics suggest 4 is a normal thing to happen. No wonder strength is telling us that this is a yellow color, right? So it's been running for like almost 3 times more than what one standard deviation is. So the normal thing to happen is 4. It went 3 times beyond, almost 3 times beyond what's normal. So this is a market which is probably, statistically speaking, very tired of falling, and it's more likely to reverse than not. Again, based on statistics, which doesn't mean it's going to happen at all. If something very tremendously relevant is happening to that stock and everybody's selling, the removal of buy orders, something's happening to the S&P. So again, we've seen, as I commented millions of times before, and I'll do it again, we've seen many conditions in the marketplace that were unsustainable, technically speaking, statistically speaking. And there is this famous quote of Wall Street that says that the market could remain irrational longer than you could remain solvent. And in that sense, we got to be respectful of what's happening, while statistics are indeed something very useful to start anticipating and preparing for maybe a change of climate, or maybe you're more aggressive and your trading plan is about counter trend trading, and you actually want to use these very extreme strengths and climates to prepare yourself for trades that are turning, or likely going to turn. So in this case, let's say, for example, we earlier we scan for levels of strength which are -4, and I want to also get not only from the strength point of view but from the count, which is the duration. I also want on the daily time frame to have a market confirm down and that went all the way to what we call late. Okay, so notice that we have early, sensible, hopeful, and late. And by the way, all of this, you guys know it well if you have watched the sessions where we talked about the AutoClimate, which was a long time ago, but it's out there, it's recorded. So I don't need to explain it all, I guess. Unless you have questions, please type it on the chat box. Okay, but basically, if I was to scan like this and click scan, so now my list is a bit pickier, is a bit more picky than before. I mean, the list is still very long because there are many stocks that have been dropping in recent times in the market. So the list it's still pretty long, but it's pickier than before because not only those stocks are in a condition where the strength is in that -4 non-sustainable territory, but on top of that, from a duration, not only from how far and how hard the market has been crashing like the world is ending, on top of that is for how long this has been happening. That's what the climate is telling you. And in this case, it's been happening for a very long time, meaning that if you wanted to short, if you wanted to go down, if you wanted to go in betting in a movement to the downside, you would be late. Okay, late means at least twice the one standard deviation. So you would be late, right? So now let's say you're looking for something more extreme. You can now combine two time frames, for example, daily and weekly, and look for also the weekly to be late. Okay, so the weekly is late, the daily is late. Now look at that. Now we are left with, markets which are in a non-sustainable territory that have been crashing for a long, long time on the daily and the weekly time frame. So, for example, JP Morgan Chase. Let's take a look. Let's take a look. Here we go. So, what do we have here? So, that market has been falling, 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 falling. So, it's in that non-sustainable territory. But apart from being in that non-sustainable territory, it is also 15 out of 4 on the daily time frame. And if we look at the weekly time frame, which is loading, it's 8 out of 3. So, real surprise from a statistical point of view. This is lasting, this move to the downside is way too intense, lasting for way too long. And again, depending on your trading style, so you may want to, maybe you're a stock trader, you want to start considering buying shares, depending on your trading plan. You maybe want to do some of the techniques that we use when we sell premium to finance calls, for example. And then you can get into a trade where if you're wrong, you can catch the stock at a lower price. But if you're right and it turns, you can start making money right away with some positive deltas. So again, all sorts of things could be done, but everything starts from scanning. Okay, and this is how you will scan for those extreme opportunities. Now, beyond that, let me uncheck the very weak strength. And let's go back to the AutoClimate. And now let's pretend you want to do the opposite, which is okay. So let's say the market is in an uptrend and I'm looking for stocks in an uptrend. And I want to join those uptrend stocks. So daily, confirm up, check mark, check mark. But now instead of joining the uptrend late, I want to join the uptrend early. Meaning, as the climate, for example, let me zoom in here. As the climate starts becoming blue, I want to enter early in the climate. So if I'm right, I can catch a greater portion of the climate. Instead of entering late in the climate, so if I'm right, there is very little money to make because I'm late. Okay, that's the difference between late and early, right? You also have intermediate options here, which is sensible and hopeful, which sensible means less than 1 standard deviation, hopeful means more than 1 standard deviation, where late means 2 or more standard deviations. So let's say you're looking for early climates to the upside and you scan. So of course, we're going to have many because it's many stocks, but maybe you can also look for the same on the weekly time frame. So you are early on the weekly and early on the daily. Now the list is lesser. Again, it's more than 1 page, so we can still see many symbols, but notice the scrolling bar is much less. And now, if you want to be a bit pickier, you can also say, okay, not only I want the climates to be up, okay, let me show you how it looks like, by the way. For example, ABM. So if I look at ABM, so we are in an early climate. Okay? We're in an early climate. That's the daily time frame. On the weekly time frame, we are also in an early climate. Okay? So this is 7 weeks. This is week number 3. So if you catch a good entry, you can be in this trade for another 4 weeks. Okay, based on the climate duration, the statistical measurement that I mentioned before. So now, let's say you tell me, I want that, but I want it to be near the 9 EMA. In other words, not only am I in an up climate, but the market is not just going up. The market is probably kind of like retracing a bit towards a moving average, and therefore I'm catching a valid price point. Notice if I do that, my list now is shorter. Actually, the same ABM would be valid one. Notice that if I add moving average, and I was to make it 9, and I click OK. So notice how the price is very close to that EMA, where, when price comes to the EMA, many times you have these reactions to the upside when you are in an up climate. Well, guess what? We are in an up climate, and we are near the EMA. So again, for sure, looking at the grouping of the stock, looking at the UFOs, all of those things would help. Again, those would be ways on how you can filter for this. You may want to be like super perfectionist, and if you do that, most of the times you'll get no opportunities. If you're like, I want it to be near the 9 EMA on the daily and also on the weekly time frame, and everything is early. Well, if you do that, well, yeah, we've been lucky to have 4 opportunities, but in many cases you would have none. Notice how ABM is not there anymore. If you look at CRA, so well, yeah, in this case we are well, not anymore actually, because the gap, is not being identified since the market is closed at this moment in time. Okay, but yeah, so you have these possibilities, and again, do not overdo it. The way I often scan is to make myself a bit more um, extreme on the larger time frame, such as early, and be a bit more relaxed on the daily time frame. And so that way, if I'm going to be right on the trade because I'm early on the larger time frame, I'm going to be able to stay for a bit longer on the trade and hopefully catch a target which is further away. So often I scan using that kind of approach. That would be probably a valid way to do it when doing some sort of trend following. For example, here is Bed Bath and Beyond. So you can see how that stock came to where the EMA is with a climate which is sensible on the daily. So it's not late. Late would be more than 6. So it's not late. Okay. But on the weekly, it's not sensible on the weekly, as you will see. It's early. So we have just started this climate. Okay, and in that sense, we may be here in for a very nice move that may continue for a long time. Again, normally, AutoClimate is one of the elements that we use to plan the trades, but there are more things involved, especially the UFOs, to be more precise with entries, exit, targets, all of those things. It's absolutely critical, but hopefully it's all understood now when it comes to the use of AutoClimate in the matrix. So please go ahead and give me a confirmation on the chat box so I know you got it and you are with me. Please go ahead. Okay. Well, I'm waiting for your confirmation there. Cool. And we just have a few minutes to go. So what I will do, thank you for that, guys. What I will do then is I'm just gonna go ahead and confirm these settings in the middle, which are in the main screen, but I never cover them yet. They are almost self-explanatory, or maybe without almost, they are self-explanatory. But in any case, let's go for it. So first of all, we have a condition of minimum price. So maybe you are trading stocks, you have a limited account size, and you want to trade stocks which are cheap. So maybe you go from $5 to $15, and more than that, you don't want to trade it. So if you were to do that and you scan, so now your list of stocks is not limited to those prices. Maybe the opposite is true. You have a very large account, so you don't want to trade cheap stocks. Maybe you want 50 is minimum. Maybe you trade options, and therefore you want to use less amount of contracts to minimize slippage, and therefore you want $100 as a minimum for the starting price. Again, this would depend on your trading plan. So those are conditions that you could set here, and whatever you have will be filtered out based on this condition. So minimum and maximum price, I guess it's clear. Minimum average volume. So of course, if the underlying is liquid, options will tend to have liquidity, even if the option chain doesn't look too good. Typically, you will have liquidity because market makers will take the other side, because it's an arbitrage opportunity for them. They can give you the option and get long or short stocks behind the scenes and basically hedge their bet and keep a percentage of the spread. So typically, if the underlying is liquid, options tend to be liquid, even though some are more than others. So you may set some particular figures here. I am using as a default 300,000 shares traded per day as an average. You may be more extreme and be like, I want 1 million. So you go for this. You may be like, no, wait a minute. I want to trade extreme liquidity. 5 million is my minimum. So now, of course, you have price conditions, you have liquidity conditions for the underlying. This is going to obviously reduce the size of the list. Minimum and maximum ATR. This is typically something very useful for intraday traders looking for stocks where you want to trade them intraday, and maybe you want a stock that moves at least $20 a day. Okay? But at the same time, you don't want them to move like crazy. because if they move like crazy, maybe it's too much risk. So volatility is good, but too much, maybe too much. So maybe you have a rule that says from 20 to 35, that's what I'm looking for. So again, if you were to scan based on that, so you're going to get a specific list, which in this case is not met given the price points I have selected. Well, actually, a minimum ATR of 20, not too many stocks are going to meet that. Okay, let me do this. 10 to 35, now we should have a list. And you can see actually the ATR values here that show here. Okay, so obviously, snow will be very liquid. Also, obviously, all of this is related because the more liquid the stock, the less volatile it will tend to be. The more the participants, the easier the orders get filled, and the less price has to move for the orders to get filled. So if you were to use, less liquidity, so now the list is longer. Okay, so and also you will see more diversity with the ATRs. So here you got an ATR of 30, for example. Here you have ATR of 11. So it's all kind of related. Then we have the exchanges. So do you want to set a specific exchange or any exchange in the US market? Do you want the filter to apply to stocks only? Do you want them to apply to specific groups? Okay. Or like, for example, utilities only, and you want everything in utilities, or you only want multi-utilities, right? So you could do that. And if that's the case, of course, this will impact the size of the list. In this case, we have only one. Okay. Or maybe you tell me, no, I don't want stocks. Actually, I want ETFs only. Right. So if you want ETFs only and you select all, so now you're going to have your list of ETFs. And of course, if you were to select a specific group, that may get your ETFs out of the list because those ETFs don't have that type of holdings, as you can see in this case, right? So careful with that because there are many ETFs, but of course there are many more stocks than ETFs. Okay, so careful with combining ETFs with the sector and group. Typically, when you use ETFs, probably you will set sector and group as all. You can also filter for stocks and ETFs. So now you have both. And of course, this is going to make the list to be just longer, even longer, because now you have all the ETFs, which is over 1,000, plus all the stocks, which, if I'm not mistaken, is around 9,000, a bit less than 9,000, unless this has changed since the last time I checked. So, so that's a pretty powerful list, and yeah, probably is too much. But again, all of those are your choices. So anyway, my friends, I have one thing left to cover in this particular screen, which I will cover next time, which is the save results. You're gonna love it, to be honest, because there is a very interesting application of save results that I will demonstrate in the next session. And from there, we are now gonna get into all the specific predefined scans, which it's really where a lot of extra magic comes in, because so far what we've done is taking raw market data and filter it out. But now with the scans, the market data won't be raw market data. It's going to be market data with specific conditions. And then we're going to filter it out further, getting to places where, potentially the opportunities that the metrics will present to us are going to be of, impeccable quality, following what your trading plan needs. Okay. Very good, everybody. We just surpassed by a little bit the top of the hour, so it's time to say goodbye. As always, it's my pleasure to be part of the sessions with you guys. Always super and special thank you for when we do those sessions on the weekends and you guys are here. It shows a lot of your commitment, and it's very appreciated on my side. Okay, so thank you so much for joining me. See you on the next one during the weekdays. Keep up the good work, and any question, you know how to reach us. Question page. You can also reach us via email if you prefer, or is more a bit, let's call it personal. Maybe something that doesn't need to be personal, and maybe something you don't feel comfortable revealing. So you can certainly use the email, because we are indeed committed to supporting you guys. So just connect with us. Do not be shy. Count on us, and go for it, my friends. See you in the next one. Again, one more time, thanks for joining me. You guys take care. See you soon. Bye-bye, everybody.